All right, welcome. This is the Unemployed Value Degen, and this is not financial advice. And today I am sitting down with one of my former students, Mitch. How are you doing today, Mitch?
Hey, Coach, I'm doing great. Thanks for having me.
I don't know about you, but I am feeling really bullish right now. Hopefully I'm not a contra indicator, because who knows, it might be. But we had the fear and greed index. It's bounced back up a little bit. It was on extreme fear a few days ago. But you have the the Trump inauguration on Monday while the markets close, or on this 3-day weekend. And then when we come back, well, there's a lot of things going on. One is, so the next debt ceiling debate, the Treasury runs out of money on Tuesday the 21st. And that's a fine how do you do to the new administration to make sure it lines up exactly for the first day on the job of the new Secretary of Treasury. But one of the things that happens with the debt ceiling situation is, as the Treasury can't issue new bonds and they pay down the Treasury general account, it usually leads to interest rates falling during that time period. So we've got the fear and greed index on fear, and this 10-year Treasury, which we've been watching every week here, it now is still nowhere even close to confirming a breakdown, but it's starting to look kind of interesting. Like maybe I had been drawing the channel down here, and then that channel failed. But even with that, we might be past the peak on this rate cycle. There's no confirmation yet; it's too early to tell. But when the market opens on Tuesday, the Treasury can't issue any T-bills, so it's just going to be the Treasury general account. So a little bit of downward momentum on interest rates. I have a suspicion that a lot of this recent spike was momentum traders. That they were more strategic Treasury shorts. That when they cover, we might not come back into this channel again. But I think the 10-year Treasury could have some room to fall here. I don't know, what's your take on the Treasury?
Yeah, take a look at the 5-day chart. It really, shows you something interesting. I was look at that drop. I think something else, macro-wise, we've had bank earnings that have been, pretty positive, giving good guidance for 25. And I think, the sentiment for 25, it was expected to have a pullback, of sorts after the Trump rally.
Yeah.
But I think, it's possible that people are gearing up for positive returns in 25.
Yeah.
And the combination of, the Treasury falling and the fear and greed meter you were just showing, last week it was at extreme fear. I kind of view that similar to how we look at the RSI, right? If that's, getting into extremely oversold or extreme fear, that's when I want to be buying.
Yeah, I think it could be quite a rally, and especially because the next real threat to the market, aside from whatever Trump does in his first 100 days, is going to be well, there might be something before this, but it's just going to be selling in anticipation of paying taxes in April, and I don't even think this April is going to be that big. I think it's going to be next April, because I think this January there was a significant chunk of selling in the Mag 7, but I don't know if the same thing was true last January. So the only thing that would crush the market is if there's a huge tax bill to pay this year. Now the market was up a lot in 2023. So people that sold in January 24 are going to pay that tax bill now. But I don't see a lot in the way of the market going higher, especially after, so sentiment got reset with that fear and greed index. And let me go down to the 3-month for the S&P 500. That whole month of December, it doesn't look so. I mean, this was the Fed being a little bit more hawkish, but it doesn't appear so obvious in the S&P 500. But when I look at just the value factor from the S&P 500 value index, right, this is crashed, pretty significantly. This had a full 10% correction, and it has to, it's got a pretty good ways to go just to get back to old all-time highs. And unless we, if it's still a bear market, or if it's still a bull market, I mean, my base case is that we are in a bull market. And if that's still true, then I think we've built a pretty good base and it's off to the races. What's your take on all that?
Yeah, I agree with your analysis. I think, there, as you can see on this chart, I think this is a great depiction of it. You have 10 or so down days in a row for value. that and a 10% pullback, that's significant, right? I think, with the positive macro, we definitely could be, getting back to a bullish market.
Yeah, and everything is below that the price it was at the end of November. Even the Nasdaq, even the Mag 7, everything is off of that November. Well, this one, the high was in the middle of December for the hawkish Fed. That's the triple Qs, the Nasdaq, the Mag 7 big cap tech ETF. Even that's below that mid-December high, and then the equal weight S&P 500. Equal weight is bounced back harder, but still a good ways off. So this is that 14 down day sell-off in value. Yeah, I feel like there was some sector rotation in January, and the market didn't know what to make of it. But I don't know. It's morning in America, right? It's although what everybody is talking about right now is 4 hours after Gary Gensler stepped down from the Securities and Exchange Commission, Trump launched his own meme coin, which is now up to, I think, a $25 billion market cap.
Wow, is it really?
Yeah, and it's kind of a gift to the crypto natives, because the official exchanges aren't going to be open until Tuesday. So everybody that operates in crypto land with 24-hour trading, they can play around with this thing for 3 days, while everybody else has to wait for the market to open to buy some. So it's I don't know who came up with this idea. I think yesterday Trump held a crypto ball as sort of a pre-inauguration party. I mean, what a wild time to be in the markets.
I think it's a sign of a change in the times. For the longest time, and I was into crypto for a good bit on that last rally. It really just goes in phases. But a lot of people, especially from older generations, have been against it.
Yeah.
And now that we're seeing the Silicon Valley being aligned with the politics, I think everyone's like, oh, crypto's okay now,
Yeah.
And Trump releasing a meme coin is just the epitome of a shift in sentiment towards crypto.
It reminds me, there's this famous George Soros quote where he had said something was in a bubble, and the market sold off on that news. And George Soros' response was, well, I said it was a bubble. I didn't say it was going to pop. And I think we might have a couple years of this market getting pretty bubblicious here. I mean, I know it's expensive on so many metrics, but I think we could all get shocked at just how expensive it gets before it finally comes crashing down. I think for a good while, semiconductors and everything in the AI space had been bubble-esque, right? But now we're starting to see some expectations reset about these different super high growth companies, and I think that's that could be beneficial for the market, because it was taking all the air out of the market for quite some time. Yeah. So let me do a couple years in the semiconductor ETF, because this is an important one to look at. So the semiconductor ETF had this massive rally on the whole artificial intelligence revolution, but it peaked, I think, in July, right? And it's been trading sideways since then. And meanwhile, I think the momentum, so that was the time when the momentum shifted from semiconductors, and then utilities became the best performing asset in the S&P 500. I think there's a possibility that the whole AI narrative changes. At some point, people are going to realize that electricity doesn't come from the wall. Electricity comes from natural gas and things like that. So we had this massive rotation. The momentum left semiconductors. It could come back. I don't know what you think of this chart, but semiconductors have been flat, and then utilities rallied, and then natural gas has been getting quite a bid. So this might be the year for energy to come back, as people realize that electricity comes from more than just the outlet on the wall.
Yeah, I think that that chart is showing a lot of consolidation, which could be a good thing, Yeah. And I agree that energy could potentially start to come back with this shift of narrative, because energy has just been underperforming, for the last couple of years. So it's definitely going to take some sort of catalyst, and oil prices haven't really been moving up as much as I would have assumed.
Yeah.
So yeah, I think if there was a shift in sentiment towards what the play is for artificial intelligence, kind of like you're saying, that definitely could benefit natural gas and these utility companies that have been going crazy the last couple of months.
Well, oil made this pretty quick rally from $70 to it touched 80. It's fallen back down now to 77. Now I don't know what you think of this chart, but this is over $110 in Canada. So these Canadian stocks were really struggling under the threat of Trudeau was going to raise the capital gains tax over there. So with Canadian oil and gas producers, with their debt denominated in Canadian dollars, which is trading at like 69 cents to the dollar right now, and able to earn 110 Canadian per barrel, I'm pretty enthusiastic. And also with this this threat of Trudeau no longer hanging over them, I'm actually kind of interested in the Canadian oil and gas space, but I don't think a lot of people expected, because usually winter is a weak time for oil prices. I don't think people expected it to come back and hit 80. There were a lot of professional shops out there saying that oil was going to be between 50 and 70 all year, and they were wrong in the first week of January, which is pretty surprising.
Yeah, it is very surprising. I didn't realize that the oil price had moved so much since start of 25. That is a pretty significant move upwards, and it does look like there's some sort of a top around 80.
Yeah,
and that might have been confirmed with this pullback, but I think there could be lots of opportunities if you're willing to wait a little bit. I think there's definitely opportunity in this chart.
Yeah, well, one of the things going on in the price of oil right now is so the sanctions under Biden were very toothless, and then on his way out, he kind of retoothed them. So Trump is going to come into a situation where suddenly, they're cracking down on the Russian shadow tanker fleet, when for 4 years they had kind of given it a pass. Well, 2 years anyway, they'd given it a pass because Biden wanted low oil prices. So, and when everybody was going off Trump's drill baby drill, thinking it was going to cause low oil prices, I kind of took the other side of that and said, well, if you put sanctions back on Iran and you put sanctions back on Venezuela, it might take some time for the shale oil plays to really ramp up volumes, and so I think we might have higher oil prices under Trump. It's all going to depend. I mean, especially if he cracks down on Russia, which again Biden just started doing, but I think Trump wants to negotiate a deal with Russia. But if he wants to so one of the possibilities is Trump either negotiates a deal right away. If that happens, then I think there's more Russian oil in the market. But some people are speculating that Trump wants to put Russia in a more painful situation before they negotiate so that they get better terms. And if that's the case, you might have 2-3 months of really hard sanctions on Russian oil combined with Iran and Venezuela. So I don't know. It's anybody's guess what's going to happen to oil right now, but this surprised the heck of a lot of people to see $80 a barrel in January.
Yeah, like you said, it's kind of anybody's guess to see what's going to happen.
And
that's been a pretty serious run up too.
Yeah, and natural gas has left this $2 dead zone and just grinded higher right to $4. And again, this is that narrative change where people went from so you had utilities in 2024. Toward the end of the year, they really rallied hard. And the next rotation from that is, the utilities have inputs, and those inputs, it might be nuclear 10 years from now, but it's natural gas to get there because nuclear takes so long to build out. And then on top of that, the winter's been colder than average for the first time in 2 years. So people are looking at natural gas, people are looking at oil. So yeah, it's energy might be interesting in 2025. It might surprise everyone. And then we looked at the 10-year Treasury. We haven't looked yet at the dollar, which is, again, before I had made this channel that I had drawn kind of about here. And we broke out of this channel the dollar index has not given back as much as the Treasury. And I find that to be pretty interesting. So you might have, even if interest rates fall, on a relative basis, the dollar might stay pretty strong. And the other central banks of the world just cut interest rates more than us. I think Canada's a full percentage point below us. Europe's a percentage and a quarter below us. We have the 30-year fixed mortgage, and they all have 5-year floating rate mortgages, and their population cannot take higher interest rates. So we might have this strange world where even if we have lower interest rates in the US, everywhere else is so much lower than us, the dollar stays strong. Because this hasn't given back nearly as much as this one has. So we'll have to see what the new trend line is here. But I'm pretty encouraged that I could just be wishful thinking here, but I think we're back on the downswing now, especially with a couple weeks of the debt ceiling negotiation and the Treasury running down the Treasury General account. Once you get some downwards momentum and the shorts cover their positions, I wouldn't be surprised if you saw Bill Ackman or Stanley Druckenmiller give a press conference and say they closed their Treasury short, and then everybody follows suit immediately. So we'll have to see. But anyway.
Yeah, I think a combination of a strong dollar and falling rates would be pretty interesting for the economy.
Yeah.
But if anything, it just makes me, less inclined to have international exposure.
Yeah, international is painful. It's just at some point international will work. And the only question is when, because it zigs and zags, right? It comes and goes. So at some point there will be a weakening dollar regime. It won't go straight up for the next 2 years, but it could stay high for a while. All right, let's jump into some individual charts.
Yeah, sure. I would love to start with FOA.
Oh yeah. So this is probably my biggest win of 2024, and I had written to my paid subscribers my prediction, and I thought that with their convertible debt that converts at $27.50, I wouldn't be surprised if the price stayed pinned there for a long time, and that seems to be mostly what's happening. But there were a lot of people that jumped in. When the stock went up 5 times, there were a lot of people that jumped in on the trade. And if it loses positive momentum and those people get bored with it and sell, it could come crashing back down. So there's people that are in it for fundamental reasons, and I think there's some fair weather people that jumped in to ride the momentum. And I don't know if next quarter is going to be a strong quarter because you have it overlapping Christmas. I mean, I don't know how many people get a reverse mortgage over Christmas, but there's a chance, especially as their mark-to-market book value. I have no guidance as to how chunky or how smooth this is going to come in. You could have a bad quarter in earnings because of the way the mark-to-market book value happens combined with Christmas, and everybody that just as this is a momentum thing bought in gets bored with it and leaves. So I've been hoping for a dip to buy. I don't guarantee I'll get a dip to buy, but I've been hoping for a dip to buy.
Yep, I'm in the same boat. I've been thinking that if we get another chance to buy it below the 50-day, I would most likely jump on that.
Yeah, well, the 50 days.
I think, like you said, the convertible debt that's going to pin it in this range for a little bit, which honestly I think is the best case scenario. Because, like you said, we have no idea how the next couple of quarters are going to go. There's no sort of consistency with the residuals coming in, and it's gone from $5 to $30. It needs some time to consolidate and to digest and let some people take profits. And if it could maintain this range and move sideways for a quarter or two, I think that would be honestly the best case scenario.
Yeah I'm hoping for a dip to buy. Not sure I'm going to get one, but yeah, I don't think it's going to be rocketing upwards. Some of my subscribers say like, oh, I bought all these, short-term dated calls. And I said, yeah, that wasn't my prediction for what the stock price is going to do in the short term, because things just take time. I mean, I was shocked that it went from 5 to 30 so fast. I thought I had time to buy more, and I was wrong about that. So willing to be wrong again.
I'm glad I did start accumulating early, though, because I've made a couple buys on this run up, but yeah, this just moved way too fast.
Yeah, yeah, that gave me whiplash. I mean, I had bought a decent sized position, not as much as I should have, but again, I thought there was a lot of time to buy before the first maturity of their mortgage-backed securities is in April of this year. But then they're going to talk about it on the earnings call after April. So what is that, June or something like that? So I thought there was plenty of time, and I was wrong. Let me check out
Well, you got to remember the market's forward-looking, so
yeah.
you know.
Well, the big surprise is that $175 million added to book value on the last quarterly earnings. That really, I think, woke everybody up.
Mm-hmm. Agreed.
New Fortress Energy. So here's that $25 price when I wrote about it on my Substack, and then here's where it crashed down to $8. But it's been grinding higher ever since.
Yeah, and that's a beautiful, recovery, chart-wise. Moving straight up to the Bollinger Band, bouncing back on the 20, and then, just keep on moving along, not letting it get too overbought. I would have said, if we if we had a TA video like a week or two ago, past that that last big gap up, that seems like it's, to me, like it's breaking out of this, bottom, right?
Yeah.
And confirmation now at this point would be seeing it build a base above the 200. But, your fundamental analysis on them, gives you what you need to be able to, be long-term and wait it out and have confidence that this is not going to zero,
Yeah.
right? So I think this, especially with, everything we were talking about with natural gas coming back, I think this could definitely be a great play.
Yeah, I mean, when I found out that they had 18-year fixed contracts for their, I mean, they're kind of locked in $7 in MMBTU for the next 18 years. I mean, they do have debt, and the debt interest payments they're not small, but this is a pretty incredible company to be so extremely on sale. But boy, did I look like an idiot when I wrote about it on my Substack at 25 and then it crashed to 8. I even had a couple people wrote that as the reason why they unsubscribed. But it's hard to anticipate that the chief financial officer was going to mishandle their job so badly that they breach a debt covenant that they didn't need to breach. I mean, that's just a wild scenario.
Yeah, I agree. And I think, we do really look for, quality management teams, people who are going to run businesses well. And that definitely is a concern to see, something so mismanaged that could have been avoided.
Yeah.
Right. But just the fundamentals, and the stock recovery is, I think that warrants, this being put on people's watch lists for sure.
Yeah. I'm pretty fond of it. Let's see. Now, the offshore, that it could potentially be dead money for a whole nother year. There's been a lot of frustration that the big oil and gas players, their offshore capex budgets for 2025 was not what people were hoping it would be. Now it looks like the big recovery in offshore spending is going to be 2026. But the counter argument to that is if they're budgeting for 2026, they sign contracts right about the summertime in 2025. So these offshore drillers will start getting new contracts and positive news and positive momentum sometime around about this summer. But this has not been really moving up much with the oil price. It's because they have their fixed contracts. But it's still an ugly, painful ride. Yeah,
agreed. I mean, I'm glad to see that it didn't, keep falling through that bottom at 3.5, 3.4. It bounced back pretty strongly to the support at the 50-day. So I kind of like you said, I don't think this is the most imminent thing to buy right now because we have some time, and I think there's other aspects of energy that I have higher upside potential in the near term.
Yeah.
Right. I think we'll have time to buy more, offshore drillers at a later point.
Yeah. Well, I'm I'm already full. I bought all I can stomach, and it's been painful to hold on to. But ProFrac Holdings has been doing some serious climbing out of its low point. What do you think of that chart?
I'm seeing some conflicting signals is how I feel. There's a really strong top right there at about 925 that it once again didn't break through, right? That's pretty concerning. It's had this, choppy pattern, and, it's at the top of its Bollinger Band. It was just, nearing overbought. I wouldn't be surprised if it, continued to pull back a little bit. But then you also have this golden cross going on, and the MACD doesn't seem to really be slowing down. So this might be, especially in the case of natural gas doing well, this might pull back a little more and then break out.
Yeah, well, it's been making higher lows, but then that's too steep of a chart really to sustain, and I don't expect that line will hold. But yeah, so but the MACD isn't rolling over. It just bounced off as far as RSI. It was getting close to 70. It's on the downswing now. I don't know. You have a lot of mixed signals, and then the golden cross where the 50-day moves above the 200-day. So
yeah, I wouldn't be surprised if we saw it closer to 850 again before it, retests.
But if natural gas stays above, or stays in the $4 range, you might see some increased drilling. As of right now, the most recent report on the number of frac fleet deploys, it was down week over week. I don't know if they, if they slow down over the winter because some of the ground is frozen or what, but the number of frac fleets has been dropping very precipitously, which makes me wonder that if oil and gas prices will go even higher if the drilling is really slowing down so much in the shale basins. But frac fleets slowing down is not going to be great for their next earnings. But it's been a roller coaster in ACDC. Yeah,
for sure. There's been a whole lot of volatility with this one. Just look at all the gap ups and gap downs.
Yeah.
This is one similar to the trading range of BTU, where you really could just buy the bottom of the Bollinger Band, sell the top of it. And, I know BTU's broken down recently. Yeah, look at that. That's pretty.
Peabody Energy had this amazing magical money hack where you just buy it at the lower end of the Bollinger Band and sell it at the upper end, and it was doing that for 2 or 3 years. Then they announced this acquisition that the market hated, and it crashed way down. I mean, I did really good selling at 29. I did really bad buying at 24 because the magical money hack would have told me to buy here, and that's where I bought, and that went from 24 to 18. So
all things considered, that was going to be the inflection point, right? We just didn't know if it was going to be upwards or downwards. That's always the risk of buying, an inflection point. It's either the bottom or the bottom falls out. And if the bottom falls out, that's relatively risky because see, look what happened here: 24 down to 18.5.
So the money hack breaks the moment that I step into it. Probably is because this thing was working for years. I got to the 3 year. I was so round about here. So April of 23. I can go to 2 years. This thing was just so well behaved. There were people talking about this. Buy at the lower, sell at the upper, and you could have done that. A dozen times over the last 2 years and had a pretty exciting returns. But then when it broke, it really broke.
Yeah, there's always, external factors that can break well-behaved charts, like a poorly received acquisition.
All right, let me jump into. So, speaking of things starting to behave well, Portillo's.
Oh yeah, Portillo's has been great. Look at that.
Yeah.
So yeah, back right at the end of December, it was getting really oversold. RSI was below 30 for a significant period of time. It hit the bottom of its Bollinger Band, and the news of they brought in Chipotle's CFO or someone from Chipotle.
Yeah, I think they're head of strategy. I want to say.
Yeah, head of strategy. That sounds right. And that was pretty well perceived. So
I mean,
And you do still have the death cross going on, and it did reach overbought on this last rally. So what I'd be watching for here, instead of buying at 1175, I would expect some more volatility. Maybe look for it to hold above the 200 day, because if it holds above the 200 day for long enough, those moving averages could converge again,
yeah.
right? And that would be very bullish. And if it just holds around this area, this 12 to 1150 range, right? And maybe even a little lower than that, you might see it dip under to like 11, 10 and a half, right? But if it just stays within this range for long enough, I think you'll get a really good buying opportunity.
So this is not a chart where you would anticipate it's not going to like rocket higher from here. The best case is that it consolidates sideways for a bit until it builds a base off to bounce again.
Right. I would want confirmation that it's not just going to sell off back under the moving averages again.
Yeah. Now this one I was pretty fortunate because I sell puts for income, and my Portillo's puts, some of them got assigned, which was fantastic because I wanted to buy. I only sell puts on things that I want to buy more, but I would have bought more slowly than having my puts assigned. Ended up having about a month where I was bringing my margin back into line after getting those puts assigned, and so that ended up Portillo's being just about the only thing I bought for a month, and I'm very happy that things ended up working out that way, because I got to. Go ahead.
I think the fundamentals are really strong on this one.
Yeah. This is one of my super secret paywalled stocks that I then have told everybody about. But if you don't pay the subscription, then you don't know why. Let's look at some of the gold miners, because there is a theory out there that 2025, if gold stays, this one is not looking so great, but if let me just bring up. Could bring up the GLD chart, but the theory I had heard was if so the market didn't trust the gold rally. The gold miner stocks have not rallied with the price of gold, and one of the reasons is because people weren't expecting the price of gold to stay high, which it has now stayed high for a good long while. The other reason is once the gold price moves up, a lot of miners have hedges on their production, and so they have they've got some collars on, and they don't get to enjoy the full benefit of the gold price. But once the price stays high enough for long enough, the collars expire. And also, once the gold mining companies are sitting on some extra cash flow, they have a lot of maintenance capex that they've been delaying and putting off. So you give them 6 months to take in all their extra cash flow and spend it on all the new machines they want to buy. But it takes a while for them to have good cash flow and then actually start showing good results, actually capture that money and actually start returning some to shareholders. So the scuttlebutt is that gold miners, after not performing well despite the price of gold running up so much, it's getting to be about the time for gold miners to start performing well if the price of gold stays high. What do you think of that theory?
I agree with that thesis. Yeah, if gold stays high, I think a lot of miners could definitely have some better than expected quarters, right? And I think for a lot of the miners, like you said, you see this sideways sort of chart, not really following the gold rally.
Yeah.
Because, like you said, no one was anticipating for gold to, stay high, right? So once that starts trickling in to their earnings and it starts, benefiting, hitting the company's balance sheets, I think that they definitely have the potential to run. And now, this looks like it's setting up. I mean, with sideways charts, it's less, the moving average convergences can be, less strong, right? But it does look like the 50-day is creeping up and, could potentially make a bullish move upwards, especially if it's supported by, a good quarter of earnings. Who knows? Yeah. It could definitely, if we see this break above, it looks like around 640, have a pretty strong triple top. It might be off to the races.
Yeah. Well, and my instincts are not great, so I don't always trust my instincts. But for some reason, I just have gold and I have copper on my brain right now. the copper price has been, pretty stable going into a channel. Actually, let me pull up a copper chart, because yeah, so copper is it's at about $4.33 a pound. It was last May at over $5 a pound. It came crashing back down hard. I don't know what you think of that copper chart, but for some reason I just have a suspicion that the everything about the fundamental setup, the electrification of everything, the slow speed to build out copper mines, for some reason I have copper on the brain. I don't know if these charts are particularly interesting.
Yeah, no, I definitely think they are, because they had that, insane run up in, March for, on this chart. You got, what, about $5 to, 10, 11. You had a double. And then there's always going to be some profit taking, some people getting, interested in other sectors as, momentum shifts, right? But if you just bought, every time that this stock, dipped below its 200, you'd be, sitting pretty right now.
Oh yeah,
right?
so it's if you buy things below, good companies below their 200-day, these have all turned out to be great buying opportunities. I just have a hard time having the patience to only do that. Go ahead, Mitch. What was that?
No, I was just saying, I don't think there's really been much of a change to the long-term consensus about copper. I think, it's just short-term. People are interested in other things, and it's consolidating, which is good. It's not, having the bottom fall through. It didn't, fall back from 7 to 5, right? Yeah. It moved upwards and then consolidated. So that's interesting to me. And if we see, maybe a sentiment shift come back to copper, then I like Hudbay. Yeah.
Yeah. So going back to our conversation about Finance of America companies, you have this massive rally, right? And then you consolidate. People get bored with it. The price crashes when it's no longer going up. All the momentum traders leave, and the price crashes. You get this long sideways consolidation. The Finance of America chart could look very much like this going forward for the next 3-6 months. But yeah, this might be it might be coming due for some more action.
Yeah, and if this is what the FOA chart does look like in 6 months, I would be pretty happy about that.
Yeah, after a 6-bagger, I would be pretty happy with that too. Let's see. Portillo, one of the other companies that I was buying along with Portillo's is the logistics company, Heartland Express. And this one, I don't think the market has taken on logistics as a Trump trade yet, and it had that huge sell-off in December with value. I mean, it crashed. There's been so little movement. It's not big dollar movement crash. It's just from 12 to 10 and back up to 11. What do you think of Heartland Express?
Yeah, this kind of just looks like no man's land to me. Just some sideways movement up and down. No real, look at how the moving averages have kind of just stayed super close for the last couple of months, right? And nothing's happened, right? It hasn't really, picked a direction. So looking at what this has done and considering, what you just said, that, no one's really piling into logistics right now, at least yet, right? I think, industrialization and reshoring and all that is going to be great under Trump, but not one of the Trump trades that have kicked off, right? So this isn't screaming a buy to me.
Okay. I started a small position in Rocket Companies when it crashed back down to, I think, $10. So it had this massive crash from 20 down to 10, and I bought in a little bit, just a small position, about 10.50. And it's starting to catch a bounce back. But this is extremely tied to interest rates. But the Rocket Companies chart started bouncing back before interest rates started improving. So I think that's pretty positive that it was extremely oversold. And then if interest rates come down at all, all the mortgage finance companies should do pretty well on that. And even if it just has a 50% retracement going from 20 to 10 back to 15, I'd be happy with this one for a 50% retracement.
Yeah, I agree with your analysis there. It was really oversold for a while, and it's definitely going to be interest rate dependent. So the next step I would say is getting back above the 50 and holding there, not falling right back down, and then it's the 200.
Yeah.
It's had a pretty strong uptick in RSI since that, so that's something I'd be a little bit cautious of.
Oh, okay.
But what I think is possibly bullish is look at how that the MACD histogram has been moving, right?
Okay.
That's been picking up volume, which, listen, it's a backwards looking indicator, but I think the fact that that hasn't really slowed down yet, that means this could continue.
Yeah. So if the MACD was starting to trend downward, that would be less encouraging.
Right.
And it's not doing that yet.
That's
All right.
right.
Let's take a look at your ARS Therapeutics, your SPRY.
Oh yeah, I really wanted to buy while it was still under the 200. I just got too caught up with life.
Yeah. Well, you've had a busy time of things with the situation in Los Angeles, but we did put this on our buy list. Last time we spoke, we told everyone this was a good time to buy ARS Therapeutics. The baby was thrown out with the bathwater. They already have FDA approval. RFK Jr. is not going after your epinephrine.
No, I don't think he is.
So and it's done pretty well since then. So that was a pat ourselves on the back for 2 weeks ago when we spoke last. That was doing pretty well.
Yeah.
Let's look
And,
also. Go ahead.
Yeah, just real quick. I think this one still a pretty good buy, right? Even at this point, like I wouldn't be opposed to you might not have ticked the bottom if you didn't buy 2 weeks ago, but I think this company just has so much potential.
Yeah.
And this is it like you said, it got thrown out with the bathwater about RFK when they're not really going to be subject to all that, and they already have the FDA approval. I see this as a relatively low risk pharma play. There's not too many of those.
Yeah.
So this is in my eyes a great way to get some exposure for a generalist.
Yeah, that was my feeling too, because biotech is such a hard thing to get into. But this one seems such a slam dunk because we know how big the EpiPen market is, and we're pretty sure that EpiPen is going to get replaced just because the general public just is not good with syringes. They stab themselves in the hand or they mess it up. So something that people can't.
I was talking to one of my buddies who's in the medical field, and apparently even professionals struggle with EpiPens. Even medical professionals sometimes will choose not to, administer it because of the risks.
Oh,
right?
wow.
So
that's terrible.
I think there's definitely, a strong case for SPRY, overtaking the epinephrine market.
Yeah, and it is a two horse race. There's that AQST with their dissolving mouth strips. And some people on Twitter really seem to think that AQST is going to win, but they're a year behind in their approval process, and SPRY is their selling product right now. So
I would rather own the company that's got an approved product that's being sold and marketed right now, rather than a hopeful.
It's just amazing when you talk about ARS Pharmaceuticals on Twitter, how quickly you get brigadooned by the mouth strip crowd and how enthusiastic they are.
Yeah, I don't know enough about that, to really say, if it's going to be good or bad, but I think there's definitely a place for NFE, even if the mouth tabs are great.
Yeah, but also the my take on the mouth strips is the nasal membrane. I mean, that's why people take cocaine that way. That's the fastest drug delivery system if you want to get it through the blood-brain barrier. So the dissolving mouth strips, it's going to be a slower mechanism. And when your kid can't breathe, nobody wants the slower mechanism.
Right. Yeah, that doesn't make any sense.
Yeah. There's your SoFi. Check it out.
Oh, that's been a good one.
Yeah. We'd started a position, I don't know, in the $7-8 range. And I'm going to have to look at my own write-up again because I don't remember what I put for the fundamentals. It was so long ago. But after a run up that big, I'm hesitant to buy more. Although I did sell some puts for income. I mean,
it has been consolidating since the run up, which is what, I with all these companies that have run up that we're looking, that's what I'm saying. You want to see, if the rally's going to extend, right? You need to give it some time to breathe, some sellers to get exhausted, after taking profits, right? So right now, this isn't something that's, screaming a buy to me. It's at the top of its Bollinger Band. You probably can get it for 14, but long term, I love the story. I love the growth. And I think, revenge of Cathie Woods, baby, small cap tap.
Yeah.
Is,
And did you see David Solomon at Goldman Sachs said that he was expecting an IPO wave? Because the narrative had been that with high interest rates, you might get mergers and acquisitions, but people are getting pretty bearish on whether or not we'd have this huge wave of IPOs. And David Solomon at Goldman Sachs said, like, no, the IPOs are coming. We have a huge pipeline of IPOs. But SoFi gives their retail investors access to IPO. Now, they're not always filled completely. You get a small allotment. But that's not every brokerage account has access to IPOs. So if we enter a period where people really want to get, and the people are so into gambling now that they want something to gamble on with DraftKings and all these gambling platforms.
You see endless advertisements.
Yeah, so SoFi might get some traction if we really have a year strong with IPOs, and SoFi is one of the better ways to have access to IPOs on your retail brokerage. They could get some serious traction out of that.
Yeah, I agree. And, it's definitely going to have to be supported by, at least a positive market in 25, for all these companies to want to go public, and get a nice premium valuation, right? But if that's kind of what we're assuming, I think SoFi is going to be a beneficiary of that.
Yeah. All right. Let's. I don't know how. I don't want to. You've been very busy with the LA fires. Let me just do one or two more. Centrus Energy. So this is one that shot up from 40 to 120, and then back down to this new consolidation range. And it's not clear what is going to happen with Trump in Russia. And there was. So I was looking at some of the confirmation process for Trump's energy secretary. A lot of the questions were about the U.S. domestic uranium enrichment capacity. And the energy secretary nominee obviously is extremely bullish on rebuilding domestic uranium enrichment capacity. But Centrus Energy has the threat that they have contracts they might not be able to fulfill with the Russian import ban. And the new Secretary of Energy is the one who signs the waivers to allow that. The waiver for the import ban, but then Russia put their own export ban. So that would have to be something that, as a part of the negotiation over Ukraine, was allowed again. But it's kind of a mixed bag. They just landed 3 really nice Department of Energy contracts, which are meant to fund this rebuilding of domestic uranium enrichment, but they have the overhang from all of these deliveries they're supposed to make, which they might not be able to make in the short term. It's a bit of a mixed bag, but it's I'm pretty enthusiastic about it.
Yeah, I'm feeling really good about this stock. It looks to me like it's forming a bit of a bull flag. After that massive run up, you got the lower highs and lows, but it is building some sort of a base around 65. I would love to see it be able to hold above the 50. But as long as we stay above the 200, I think the fundamentals for their market position are incredibly strong, right? And yeah, with the range you just drew, it could definitely break out and continue rallying, right? Yes. It's had this strong consolidation, has a floor, admittedly, I've been buying this one at not the best times.
Yeah.
But I think it's definitely something to keep an eye on. But there is a good bit of political risk to this, and just seeing what the whole energy market does and where all that goes. So
yeah,
I'm still definitely constructive on this name.
So the bull flag looks something like this, and then when the volatility compresses down to this, when the triangle makes a point, then it's usually a breakout. I'm not quite sophisticated enough to tell the difference between a bull flag and a bear flag, though.
Well, yeah, a bear flag would just be the other thing, but the same thing but reversed.
Okay,
right?
so
if it was
a falling chart.
If the chart was falling and then it was hitting some higher highs and higher lows, it eventually, would exhaust the buyers and, most likely break out to the downside.
Oh, okay. I think, let me see. So with the value factor from the S&P 500, there is a chance that is some sort of a bear flag pattern, right? This is, well, maybe not exactly. It's not a perfect bear flag, but it's something like that. That this could be this consolidation period that could end up being a bear flag. Am I thinking of that right?
Yeah, no, that is the right way to think about it, and that does kind of look like a bear flag to me.
Okay. So,
but it's always harder to use technicals on ETFs and stuff that are so broad based. It's I always find technicals seem to work better on individual securities.
Yeah. And then people get made fun of pretty quick if they're using technical analysis on things like the VIX or some sort of a derivative, not even an ETF, but a true option or derivative graph. Who knows? Maybe it works. I'm still trying to get my training wheels on for technicals. It's Are there any names that jump to your mind that we should look at before we say goodbye to everybody?
Let's see. Applied Opto.
Yeah, that's a good one. So this one, I feel a lot better about the call that I sold. So this one, I forget. I think it was somewhere around here. I sold a call at 30, and then for a January, and then I was able to do a cash out roll up. So currently I have a call sold at 35 for March, but I've taken cash off the table 2 times, and I don't feel so bad about it because I think I forget where I bought it, somewhere around the 16 range, maybe here.
Yeah.
So I'm happy with the calls that I sold, although by March, who knows, it could be 60.
Yeah. With this one, kind of, we've been looking at a whole lot of rally charts today. It's consolidating right now. It dipped under the 50. Got to expect some profit taking when something goes from 10 to 40, right?
Yeah.
But the story with them stays strong. And they raised a little bit of money to do some funding, and that also had to do with this consolidation period, right?
Yeah.
So, but they just raised all this money, and they needed to grow. I forget exactly what was said, but the CEO made a comment saying pretty much that they needed some more cash if they want to grow at a speed faster than expectations.
Yeah.
Right. So that's what they did.
Yeah, just needed to raise some money for working capital.
Mm-hmm.
Yeah, and that you get so spoiled in software land with things that have zero marginal cost. They don't need money for everything, but in hardware land, you actually need to build something physical. You've got to have inventory and raw material and product and all that stuff.
Yeah. So I'm not necessarily jumping the gun to buy this again here, but that's mainly anchoring bias, because I was buying this from around 12 to 14 bucks, right?
Yeah.
So even though maybe I'm not looking to buy it, if you're not in this yet, it's a great stock to own, in my opinion. And this isn't a terrible time, but it definitely has the potential to fall further from here.
It is very, very hard to buy something after it's doubled or tripled. Even if it has so much more room to go, it is very, very, very hard to do. Let's see. Maybe. Oh, go ahead.
Analytics.
CDLX. Yeah, this one is still in no man's land, and it's strange because they had that American Express contract. You think it would have moved the needle, but and they have new management, so they promoted their chief operating officer to the CEO, and I have mixed feelings about that because it's kind of like he was around when the company was flailing. So what is he going to do different that's going to stop the company from flailing? but the size of the opportunity is so huge that I feel obligated to have at least some position in it, because if they ever get their act together, it'll be amazing. But in the meantime, they're just kind of trading sideways.
Yeah, it's pretty bad that they broke out downwards from the range they were in, unable to hold above the 50. That's, pretty concerning to me.
Yeah. Let me see. Yeah, I just this one and Open Door both. Because the size of the market and the advantage they have, so they have a huge market and a moat. They're just not executing and delivering. And TeleDoc is in the same boat. Cardlytics, Open Door, and TeleDoc, they all have the same thing: a huge market, a huge head start. They just have to deliver. And so I feel like those three are very similar, because if they just delivered, the stocks would be such enormous multi-baggers. And now it's on management to actually do something with it.
Yep, I was just about to say, that's why, we look for a strong management team.
Yeah.
Right?
So TeleDoc, none of these charts look particularly exciting right now. But
there's one more chart I want to look at before we wrap up, and that's Joe.
Oh, yeah. I just put some of this in my wife's Roth IRA for the 2025 contribution.
Yeah, so this has been moving up this last couple of days. It was oversold for a little while. I think there's just a lot of fear in the market around housing, especially under Trump. One of the theses, is that the right way to say it?
Yeah.
That I heard was the deportations were going to be bad for construction workers, and that's going to hurt the home builders.
Yeah.
Which who knows how that's going to play out. But I think this was getting, unnecessarily, taken out to the woodshed. So, I bought, I bought a little bit, too early. I'll probably buy some more again, because, if there's anything, that's something to buy now and forget about, this is definitely in that case, along with like Jackson.
Yeah. Well, what's nice about what I think is very positive is the stock price. It's just like Rocket. The stock price started rebounding well before the 10-year Treasury started falling. So that's a strong indication that it was just so oversold. It had the same value sell-off at the start of December as all other value, but its sell-off started before that because the chairman, Bruce Berkowitz, stepped down. So now Joe had a bad management team until Bruce Berkowitz came in and bought a controlling stake and replaced the management team. He stepped down from being the chairman of the board. I think it's just a matter of being old and wanting to retire. But the management team is still, he still owns enough stock to control the company. He's not selling, and the management team is still handpicked by him implementing his strategy. So I feel like the sell-off from Bruce Berkowitz's retirement was unjustified, and then it got caught up in this sell-off just from value in December. So I think buying Joe at $42, well, is going to be one of those amazing opportunities. I don't know, how long it's going to take to rebound to a more reasonable price. But if we have
I'd love to see it hold here, maybe consolidate a little bit, not fall right back down.
Yeah.
This would be something, I'm keeping on the radar.
Regarding the deportations, I suspect, so I mean, for some reason, Republicans think that, or Trump's base thinks that he's, as conservative gets. I still remember him as a New York Democrat who was anti-gun and pro-abortion. I think when we look back on exactly how many deportations, so they did say that anybody with a criminal conviction, either in their own country or here, they are going to physically round up and get out of the country. That is about 1 million people. I mean, it's just shocking that the borders were so open, you let 1 million convicts come into the country. That's just completely insane. But between 10 or 15 other million people that are here, I think that's much more along the lines of cut off all transfer payments to them and see if they still want to stay and work a decent job after that. So I don't think they're going to round up 10 million people. I think they're going to round up 1 million. And also Joe's real estate, it's much more high end. And with baby boomers retiring and not wanting to be around a frozen winter because it makes their joints ache, I don't think Joe's going to, think some home builders will get affected. I think it's much more the multifamily, the renters that are more affected, and I don't think it's going to be the high end that's affected. So I'm pretty bullish for Joe, because the number of people moving to Florida to get out of taxes in Illinois, it's not slowing down. It's not stopping.
Yep, I agree with you, Takes.
Yeah, well, just attempt to do one last chart, because we had put well, maybe I did it without you, but I had put a trade alert on Okeanis Eco Tankers, and the tanker stocks have all rallied hard off of their lows. Because of the new sanctions on the Russian shadow fleet. And also, just out of fear of Trump, China has already started complying with what they think Trump is going to do when he takes office. So the demand for oil tankers shot up, and the day rate shot up just from China starting, because it takes, a couple of months for ships to get from one place to another. So China, in anticipation of Trump, already started, chartering not Russia's shadow tanker fleet. So, and then the Houthis in the Red Sea, so that they are going to stop bombing things now that there's a ceasefire agreement between Israel and the Palestinians. So,
yeah, and so considering how shipping and tankers are ultra cyclical, the fact that these are rallying right now, that helps add to my conviction about where we think the market's going to be going in 25.
Yeah, I am pretty darn bullish. So going back to the fear and greed index, going back to just how much the market has sold off. And also just the sentiment. So my own personal portfolio, on Thursday, I had my own hammer candle where the day started and I was 5% down for the day at the open. And over the course of the day, it grinded its way back to break even. And then on Friday, the market grinded higher all day. And that's rare behavior for a Friday, because people typically want to get out of the market on Friday for geopolitical risk. And this is in front of a 3-day weekend. Yeah, so a 3-day weekend with the Trump inauguration, and the market grinded higher all that Friday and had that hammer candle behavior on Thursday. I think we're off to the races. I don't know if anything's going to slow down this market until some tax selling in April, but it's a long way between now and then. But I think we could be on for quite a rally.
Yep, I agree with you. But I'm going to have to cut out now. Thanks for having me. I think this was a great analysis session.
Yeah, it was more fun when things are looking up. It's been some depressing ones over the last couple of years. Thank you for coming, Mitch. I really appreciate it.
Yeah, always happy to. All right, have a good one.
Bye now.